Welcome back, dear traders. Wall Street might open sharply lower today. InstaForex analysts know what to expect from a new trading session. Wall Street closed in the red on Tuesday. The S&P 500 incurred losses for 4 sessions straight. Investors are alarmed by recession fears and the hawkish Federal Reserve. The Dow Jones lost 1.03% or 351 points. The Nasdaq printed the heaviest losses of 2%. The S&P 500 closed 1.44% lower at 3,941 points. The new trading session will hardly soothe the investors' nerves. The key stock indexes traded lower in the New York pre-market. The S&P found support and crept to 3,910 points. If a technical rebound does not prop up the index, it could cross 3,890 points. The S&P is expected to trade in the corridor between 3,870 and 3,990 points. Most of the 11 sectors included in the S&P 500 went down on Tuesday. The energy and communication sectors joined the high-tech sector, showing the weakest performance. Tesla was the culprit of pessimism on Monday. Meta brought bad news on Tuesday. The shares of Facebook's parent company plunged 6.8%. The European Union watchdogs ordered that the company must not require from users the consent on customized advertisements on the basis of their online activity. Other high-tech giants such as Apple, Amazon and Alphabet tumbled by 2.5% and 3% as investors are cautious about rapidly growing companies whose performance could be sluggish under turbulent economic conditions. Top American banks were mainly to blame for pessimism yesterday as they revived recession fears. The Bank of America predicted moderate economic contraction for 3/4 next year. JP Morgan CEO Jim Dimon said that inflation will cripple consumer activity and the recession might be both light and rather painful. Such comments followed the recent forecast by BlackRock and other banks. All of them share the viewpoint that aggressive monetary tightening with the aim of taming high inflation will lead to an economic slowdown in 2023. Bank stocks are the most vulnerable to an economic slowdown because they could face the fallout from bad loans or subdued growth of lending. So the bank index by the S&P fell by 1.4%, the lowest closing level since October 21. Traders are revising the forecast of a further path of rate hikes in the near future in light of the strong non-farm payrolls and the ISM non-manufacturing PMI. The Fed Watch tool indicates the 91% likelihood that the U.S. Central Bank could increase interest rates by half a percentage point at the meeting on December 13 and 14. The official funds rate is expected to reach its peak at 5% in May 2023. On the flip side, the hawkish Fed, which is bullish for the US dollar, makes a negative impact on the US rate. The red-hot macroeconomic data showed that the US trade balance deficit sharply increased in October because waning global demand and the overvalued US dollar dented exports, which fell to the lowest level in 7 months. Analysts suppose that foreign trade might derail strong economic growth this quarter. Trade balance deficit rose by 5.4% to $78.2 billion. A wider gap in a trade for the second month in a row is partly caused by changes in trading pharmaceutical goods, whose exports sharply dropped while imports increased. The overvalued US dollar challenges the competitive advantage of the US merchandise in the global sales markets. Nevertheless, the US economy is showing resilience despite tight financial conditions. Inflation data for November will be on tap on December 13, a day before the FOMC unveils its final policy decision this year. The annual CPI declined to 7.7% in October, having dropped from the fastest rate in the last 4 decades. Today, investors are digesting the data on the US labor unit costs, which might give fresh impetus to the stock market and the faint hope for a slowdown in the US economy. Non-farm labor unit costs unexpectedly grew 2.4% in the third quarter, much lower than the flash estimate of 3.5% and the consensus of 3.1%. It reflects growth in wages by 3.2% and an increase in productivity by 0.8%. In annual terms, labor unit costs climbed by 5.3%. Of course, such data helped risky assets to regain their footing. Apart from economic data, it makes sense to take into account tools of a technical analysis and the news from top American companies, which might enable rebound in the stock indexes or push them down. The US dollar traded confidently, with its index consolidating at about 105.50 in the pre-market. The index lost its confidence in the early New York session and slipped to 105 points, having shed 0.4%. The intraday corridor for the index is seen between 104.70 and 105.60. The US dollar index halted its 2-day rally and consolidated at around 105 points, supported by recession fears, which dampened their risk-on mood. Leading US banks with a gloomy forecast assured investors to flock to the safe haven greenback. The Bank of Australia came up with its recession forecast for the United States and the UK, the Eurozone and Japan. According to the poll for Reuters, the US currency is set to recover across the board in the nearest months because the looming recession in the United States and other economies contributes to its high demand. The USD card pair came to a standstill, trading sideways at around 1.3615 ahead of the crucial event. The Bank of Canada is due to announce its policy update, despite the greenback's weakness and the rally in the oil market. All eyes are fixed on the policy meeting. The Bank of Canada will unveil its decision after the opening bell, which will influence the further dynamic of the USD card pair. Tuesday was not a successful day for the loonie on the back of a decline in oil prices. Brent crude slumped the most on Tuesday since late September. Brent price tumbled 3.81% to $70.53 a barrel. On Wednesday, Brent crude futures rose 1.19% to trade at $80.29 a barrel. Apart from a recovery in oil prices, Canada's business activity accelerated in November at the fastest rate and inflationary pressure calmed down. The IV PMI rose to 51.4 points in November from 50.1 in October. Investors are trying to puzzle out whether the Bank of Canada will decide on a hawkish reversal in its rhetoric or will signal the moderation in the pace of rate hikes. The crypto market is still overwhelmed by the doom and gloom. Popular tokens are extending their slide. Bitcoin traded at about 16,800 in the New York pre-market, having shed another 0.9%. Besides, major altcoins are printing even heavier losses. Mass media did not report any alarming news on the crypto industry, but the market lacks positive news. Bitcoin is expected to remain in the trading range between $16,800 and $17,200 until the price escapes from one of another borders. To sum up, despite the overall pessimism and recession fears, analysts do not rule out that risky assets could fight for their recovery. InstaForex wishes you gainful trading. See you online tomorrow.